All right. Hello and welcome back, everyone, to the New York Live. It is 23rd of November now. Uh, Early trading hours, 8:30 a.m. Eastern now. And let's get started with the euro. We want to touch base in four charts. Actually, I want to discuss euro, gold, dollar index, and also crude oil if possible. All right, so let's get started with the larger picture in euro. I want to spend some time. It might be extended. This session could be extended maybe 5 more minutes as well. Okay, so that's the daily view. Let's start with some labeling here. Since early 2017, the euro has appreciated and rallied into potential five waves. Now, most probably into we have done the extended third wave, uh, and we are still into the fourth wave, which is kind of terminated, or it is expected to terminate somewhere around the mid 1400 levels. After it is done with that, maybe we might be seeing one more high, which could potentially take us towards 2100 or maybe 2200 levels and higher as well. So this is one scenario. The second scenario could be 1 2 3. We already have wave 3, and then wave 4 and wave 5 already in place, right? Now if the second scenario comes into picture, then we are going to witness a deeper corrective drop in the form of an ABC, out of which we might have got an A. We are waiting for B to appear, or it has already appeared now, and we could go all the way towards wave C. Low. All right. So those are the two probable scenarios that we are working out at this point in time. That's the bigger picture, or the larger picture we need to keep always in mind. All right, let's look at the oscillators as well. Uh, the RSI is the most important one. It's approaching 61 levels, quite just about the resistance, right resistance around 61 levels right now. Alright, so we've got to be a bit careful around these levels on to trading heavily on the north side. Alright. Okay, that's on the larger time frame. Let's go on a 4-hour chart and evaluate whether what we've done is still logical enough. If you have been there with me in the past sessions, we went long. Earlier we went long. We wanted to go long. Prices did not trigger. Then we just aggressively went short again. I'm going to pull out the retracement levels for us. And then let's do the trend line as well. For those who are joining fresh, warm welcome to this channel. It is by the trader for the traders. So, the two things are notable here. One is there is a good resistance, immediate resistance around the 1880 1900 mark, right there. So no doubt our stop loss is around 1860, 65, pretty close, but we don't want to take unnecessary chances actually. Another trade plan is already ready. If we get triggered, we will be looking to watch out for the 61.8% resistance out there, and a reversal pattern to initiate shorts again. So the entire wave structure could be the boundary which is being worked upon can be defined as 2092 as the wave A, and 1550 as wave AB points, or you can say an entire drop as one wave according to the wave principle. What is followed is the first leg within the three leg corrective rally. I repeat, it could be the first leg within the three waves corrective rally. Now the second leg, we are looking out for a second leg which might have already terminated. A good reason to believe that it is terminated could be the backside of the trend line hit, or it can still form a low around 1677 with an ABC flat structure. Alright, so let's do a bit of labeling here as well, brothers. Maybe we've got a simple wave 1, capital A. We're looking for capital B either formed or somewhere around 1670, and capital C. That would be a wonderful Gartley wave structure if we get a rally impulse after this flat wave structure is over. Either the wave flat is already done, or if it's unable to cross 1860, that's why the chance has been taken on the short side. If it is unable to cross 1860, then there are fair amount of chance or probable chance for an ABC flat in the making. That's if I want to label, I can do that. It's a small a, small b, and a small c over here. Believe it or not, that's going to be very powerful bounce if it follows an ABC counter trend within the overall counter trend that we are expecting a down Gartley to form. All right, so overall, let's wait and watch how prices are reacting over here around current levels till the time it's below 1860.65. I think we should be witnessing a potential flat ABC towards 1670 maybe, or at least 1700 levels before we review the chart again. All right, the next leg could be a rally towards 1975 or a continued drop. That is to be seen at that point of time. All right, so to summarize, euro aggressive shorts have been taken. Let's see how prices are reacting in the next few hours. All right. Okay, the next chart we want to focus is on gold. It's one of the charts which tests you maximum in the patience levels. Okay, let's have the bigger picture now. Let's look into the bigger wave. 2015 onwards, what it has done is simple waves. Okay, let's do a simple wave count. Wave 1, that is instead of wave 1, it's actually forming a triangle, so I would label this as A. B, wave C. If this wave count holds to be true, then we are looking towards wave D, lower, and then we'll also have wave E, higher. Now that would be a potential wave 4 of the larger term, very larger term picture. We'll discuss that sometimes in the educational session or during the weekend when we meet up. But if this wave count is correct, then we are most likely going to witness a drop, and a good drop in gold. Maybe it's already initiated from 1351-57 levels, and also the first wave is done. Second wave most probably should be done as well, and the third wave should take us all the way towards 1200 levels. Now, if this is surprising to you, then I would say that it should not be, because the sideways consolidation in gold continues, and it could be, we are expecting that sideways action to continue further unless and until it breaks above 1260, or in the broader sense it has to break above 1375 to come out of this triangle or potential triangle consolidation wave structure. All right, so this is what is, if I connect the two highs like this, and the potential lows B and D. D is expected. There's a wonderful Fibonacci correlation as well, why the D should be around, terminating should be around 1200 levels. A simple Fibonacci extension of wave A also will bring us to 1200 levels. All right, and the second way to interpret is wave D, which is forming right now. All right, these two waves, wave D should be around 62% of wave B, the distance traveled by wave B. You can just calculate between 1374 and 1121, whatever the distance, 62% of that distance should be of wave D, which normally comes around 1200 levels. We'll touch base upon the triangles sometime when we discuss during the weekends or the educational sessions. That's what I want to start off, maybe this week or starting next week. So please stay tuned. I'll be making an announcement soon about the discussions or educational sessions series as well. Going back on the daily chart, it's not required actually. Let's touch upon the 4-hour time frame first. So that's the drop I was calling a wave A, and then we potentially might have gotten wave B, because if time and again we have discussed this, one more time brothers, it is 3 waves down, 3 waves A, B, C, and I'm pretty confident about this wave count, A 1, 2, 3, 4 and 5. Now I may be wrong, but the current pattern identification says that wave C unfolded into 5 waves, ending up as an ending diagonal structure. Potentially looks like an expanded diagonal structure, which if this interpretation is correct, then prices should ideally remain below 1296. On the safer side, we have suggested to place stop loss around 1307. All right, so brings us to the smaller wave counts. We can view that on an hourly chart as well. The smaller wave counts could be wave 1 and wave 2, again 3 waves, and the third wave, if it is on its way, brothers, you're going to see a very swift drop. This is wave 1, wave 2, and then the third of the third wave is just about to begin, and that should be by all means, by all theory, should be the quickest and the largest waves. Let me just try and expand where the third wave could go and end or terminate. All right. What we've done here, if it's correct, then 1273 should be seen on your screens very fast. So stay tuned on the short side, brothers. All right. Even if you're joining just now, we are just about the right price around 1291.92, where we've suggested going short with a stop around 1307, targeting around 1270, 50, and even lower. Alright, so gold brings us to the same short-term, medium-term analytical conclusion that selling on rallies should be good for now. Alright, there is another alternate count as well, but it's not the right time to discuss. There could be a maximum push to test 1306. Even beyond that, chances are very less, but the 61.8% resistance is coming around 1320. We might change our trading plan just in case if prices break above 1300 or 1306. Alright, but for now, selling on rallies definitely is the trade strategy for gold. Alright, the next chart. Watch out for this guy. It's normally defined as an underdog, but when it moves very swiftly as well. And let's start off with the daily picture. Again, the same story as we discussed in the euro. We might have gotten 5 down. Or we might have had an extended third wave, that's all. Now if that is the case, then wave 4 is being worked out, and if we've got an impulse, then this rally, actually I believe that this is 5 waves. I'll explain why. We'll go on a shorter time frame and look into that closely. But if this guy is seriously 5 waves, then the corrective rally has got enough room to move on the north side actually. Alright, and that's the reason why we have given a swing trade in the dollar index. It requires patience, but should be there. Last time it fell just short about 38.2%, but this time on, what did I do? So many ratios here. Uh-oh. So they were the 61.8%, 99.00. That is where prices should be rallying all the way through if I consider the entire drop as an impulse. Alright, that could be the first wave. We are looking at an A, B, C rally. Okay, and let's look at the oscillators as well. if you watch at the RSI, this is an indicator which gives us it gives us confidence, more confidence to believe what we've studied on the chart is on the right direction or not. Pretty much very close to the buying zone around 30-34, uh, and that's what we've been calling for in the dollar index. I mean, you can go long partially. We went long around 20 and then we want to buy more. Let's go on a smaller time frame, brothers. Yeah, we got some around 93.25 and we want to buy more around 92.60. Please remember, previous wave 4 termination is also coming around the 92.80 mark. If you're still wondering what I'm talking about, the previous wave 4, when you're counting waves, we'll be discussing much about all these things during the discussion sessions or the educational session. I hope you're going to love it. That's the passion that we are working on, uh, that drives us, sorry. So wave 1 and then wave 2, potential wave 3, 4. All the guidelines are also being followed. That's why no reason why not to believe that this is a wave 4. It doesn't enter the territory of the first wave as well. So that's wave 4 and then wave 5 right here. Could be an ABC already. Wow. Okay. Looking like the wave structure is falling in place. 5, 1, 2, 3, 4, 5, and then an ABC. And oh, if this is correct, then the next move should be on the north side, accelerating above 95 easily and reaching around 98, 99 levels from here. All right. So this is another story, a wonderful story, I would say. Gold bouncing right across the 50% mark of the entire rally, the wave 1 actually, and that's pretty much falling in guidelines with where the second wave could terminate, right? We were counting on the 61.8%, that's why remaining 50% was suggested here, but at least you should be long at least one half of your trading capacity, brothers. And one more quick humble request is to kindly look into your equity managements always. 1 to 2% risk on your trading accounts is a good risk management over the longer term and should be helping you a lot as well. Trading just for the sake of trading like a game of lotto is or speculating on 5% or 10% of your margin account. Kindly avoid that, because when you go right and you don't know why, is more dangerous than you go wrong and you know the reason why exactly you went wrong. All right. So that's it for now. I think we will discuss again. I wanted to discuss crude oil. Excellent chart setups forming there as well, but I'll touch base on the crude oil next session, that is UK times tomorrow 3 AM Eastern. And as always, I would love to hear from you on my email, Harsh. I'm just typing it out here. Or you're all welcome to join the complimentary Telegram channel, where we keep on pushing live trade setups and also updates. All right. So we'll touch base again tomorrow around 3 AM Eastern, UK in the UK live session. Until that point, thank you for joining in again. Thank you for being here live, and in case you missed it, there would be archives available in just a few minutes from now. All right. So till the next session, brothers, please take care and God bless. Goodbye.